People who understand it, they earn it. People who don't understand it, they pay it. And it was said by Albert Einstein, one of the most famous physicists in the world. And it was said even by Warren Buffett, that founder of Berkshire Hathaway, born in Omaha, Nebraska. Even people like Bill Gates are investing so much their money into Berkshire Hathaway. I think it's around 30% of his net worth, which is quite a big, right, investment. In one interview, they asked Warren Buffett, hey, what's the secret in order to be wealthy in life? And he said, like, firstly, you want to live in the country like United States because it's land of opportunity. Second, he said that I have good genes, so I can live long enough, so I have more time, to do my investments and so on. And the third, he said compound interest. Albert Einstein said as well that this is eighth wonder of the world, compound interest. Hey, what's up guys? Welcome back to Millennial Money. Today let's talk about what are the questions that even Warren Buffett asks himself when he's buying a stock. You can apply it if you are already on the market and investing for a long period of time, or you are just about to begin, because once you learn it, you can apply it. You should apply it down the road. If you like it, don't forget to smash the like button and hit the subscribe button. I appreciate it a lot. With that being said, let's just begin. When it comes to stocks, it's pretty good to follow like Warren Buffett because, in my opinion, he's one of the most successful investors in the world. His net worth is over 100 billions. And the craziest thing is that he started from zero many years ago. He said he learned basic principles that he is using even right now in his life. And he was selling door to door like sodas, chewing gums and so on. It's pretty cool. A couple tips you can apply before you buy something. Like he is saying as well, like buy what you understand. Don't buy things that you don't understand. Let's say you are working in technology sector, so you can be focusing on that part. Then let's say art or anything like that, you know what I mean? He's always saying when you are buying, company, make sure it produces something or offer services. He and his buddy, like Charlie Munger, that actually they started together.
Business empire needs decisive leadership, but also a steady hand. For over 40 years, Charlie Munger has been the ladder for Berkshire Hathaway. As Berkshire's vice chairman, the 95-year-old Munger is Warren Buffett's right-hand man.
He's very wealthy right now as well. They are against the cryptocurrencies because they are saying it doesn't produce anything, and they're right. So they said it totally goes against their beliefs because they're like value investors. There is some value behind the company and so on. And you have to find that value as an investor. So what he's saying, that focus on the companies that they have easy or simple business model. That way there is small risk, so you can avoid the risk. Very important that he is holding investment in average 19 years. So he is saying that be there for long period of time, because if you are there for short term, there is so much risk. Let's say you buy the asset today and you want to sell it just 2 months from now, you have to sell it for some reason, so that way you might go to the risk. Then he is saying, buy under value stocks, which means today you buy something that should cost more, but people don't know it, market doesn't know it, and with a period of time, market will know that this company is actually pretty good, so the price will go up, but you already made decision way before, so you are already getting some gains. It's very hard and it requires a lot of time, so that's maybe something for next video that might make, that how to buy undervalued stocks and what you have to be following and what you have to check in order, to make a decision and so on. The most important one is practicing the patience, because even right now, if you think about it, there are so many TV shows or on the internet, you can see how inflation is very promoted. Kinda you should invest money because there is inflation. So they are saying cash is useless and so on, because inflation is killing it. But for example, in Buffett's scenario, he is always having big portion of cash for opportunities. So what he is saying that, don't rush if you don't have to. Don't do unlogical decision because of some news or anything like that. You should actually avoid all emotions when it comes to investing, because knowing people, I think emotions are very hard to control and they can actually destroy your whole portfolio if you don't control them. So let's jump to the first one. What he is saying, when you are buying a stock, you should ask question: if I would have money, would I buy whole company or not really? So he is meaning that you should be focusing on the company, on the business, not on the price of the stock. Think about it, if the price of the stock would say what is the value of the company, then there is no job required, you can just buy it and you did everything that you could. But the thing is that price of the stock doesn't mean anything. It might be way overpriced, it might be actually like pretty much the same that it should be, or it might be way less. And your job is to figure it out. Let's say price of the stock is going down and you will just buy it because it went down. I want to do the strategy dollar cost averaging, which means if my asset that I totally believe will go down like 10%, so I will buy like additional portion. Or if it goes 20% down, I would buy actually double than I bought before. But he is saying you should ask question, why is it going down? What's happening? Is there something with their strategy? Is there something that, they didn't manage? Or is it just the cycle that the whole economy is in, or what? Good question to ask is that, for example, where is this company 5 years from now? Or what's their like competitive like advantage, Then you should ask question that, am I willing to put my money into this business? So that's like what Warren Buffett is meaning, like you don't just do that, okay, I want to buy a stock because my friend told me, but I want to know why I want to buy it, what's behind it, what's the potential and so on. The other question that he asked himself when he is buying a stock is that if the price of the stock will go down 50%, what I'm going to do? Deal with this is actually that people are buying, just something because they did read it on internet or friend recommend, hey, buy this, and then they don't know what to do. Whether it's go up 50% or 50% down, what should I do? Should I buy it more? Should I sell it? So Warren Buffett is saying this is test for yourself, if you know why you bought it. Because if you don't know, probably in long run, you are not going to be profitable, or at least in average, because there is some psychology behind this as well. When it goes down, don't just buy it because it went down, but you should ask question why. Okay, is it because the whole stock market is going down, or there is something within company going on? For example, let's say there is a company that is offering like huge dividend yield, let's say more than 10%. And there is so many investors buying that company just because of that, which they shouldn't, but if they are focusing on the dividends, of course there are people doing it. And now that companies stop paying dividends because, for example, war in the Ukraine is happening, and for some reason they don't want to be paying dividends because they want to have some cash as a safety net because they feel there is uncertainty in the world or anything like that. All that people that put the money into this company because of the dividends, like benefits, they are gonna sell that stock because it's not interesting for them anymore, right? Or let's say the company is doing something with the refinancing their debt, so they stopped paying out the dividends. That means that people will sell their stocks and then price of the stock will go down. Common mistake that people do, sometimes they are so much focusing on these dividends and they are kind of greedy about the yield and they would forget about the price of the stock and so on, and about the business. They don't care, but they want to see some like interest and so on. And there are so many companies that are offering their bonds like with 10 or 15% yield, but they disappear after 2 years, like the companies, right? So which means you lose the money. Even when you buy like bonds that are backed up by government, it's hard to make a decision which bond you are going to be buying.
If a country has defaulted, but they're not allowed to do business with Russia, so what's next?
Before the war was there with the Russian and Ukraine, like European citizens, European investors were buying Russian bonds, like backed up by a Russian government. They were offering good yields, When the war started and then all restrictions came, then all these assets are freezed. So, it's kind of risks that you don't want to be, participating in. What Warren Buffett wanted to say, if something goes down 50%, he wanted to say you should figure it out why. And this is, you should know why you are into this stock even before. And then you are figuring out what is happening and so on. Then you can make decision that, okay, I'm gonna buy more because price went down, or I'm not gonna buy anything. Then the third question that Buffett is asking himself is that if I buy the stock, am I okay that I cannot cash it out upcoming 5 years? He's saying if for some reason I'm not gonna be able to sell this stock, how it's gonna affect my life. What I believe that you should never put so much into something that you cannot lose. You cannot, afford to lose this money because it will ruin your whole life. Meaning when you do investing, make sure it doesn't affect, you, like if you lose that money or it affects your family. I'm pretty sure you know at least one person that was investing so much and then it didn't go well. And conclusion is that, let's say that person had to sell everything, like let's say house, car, or just because that person put something into that didn't go well, it's, okay. But that person put so much money into it and it didn't go well. That's the problem. So that's what Buffett is meaning, you should know what you can lose. What is the amount that you can invest, that you are comfortable to invest, and you are comfortable to lose. Even let's say you think that this is the most safest option that you are going to be doing with your money, but you should ask question, what if I'm gonna lose that money? So Buffett is saying there is huge psychology behind everything when it comes to investing, and for sure you don't want that it will affect your lifestyle or anything like that. This is not what he wants to. He is known for very safe investing strategies, and I think like with all these questions and all these principles that he follows, that's why he's doing that very good. Investing is so much like mental, it's like psychology behind it and emotions, and if you don't know how to control it, don't buy individual stock, just buy like S&P 500, which is like broad index fund. That way probably you are not gonna get that kind of gains like he does, but it's safer and it's not that time consuming for you. So pretty much what Buffett is asking is that if you buy a stock, are you willing to buy like whole company at all? Then he's asking that if the price goes down 50%, should I buy, should I sell? And then after he bought certain stock, he's asking that what if I'm not gonna be able to sell this stock for 5 years or 10 years? How it's gonna affect my life? What if I cannot liquidate that investment and my capital is over there? So I hope some of these tips and principles that Buffett is following that will help you to do better decision. And if you like it, don't forget to smash the like button. I appreciate it a lot, and don't forget to hit the subscribe button as well. If you want to learn how to invest money, not just like investing into stocks, you can check out my video where I was talking about other options that you can try. In my opinion, they are the easiest, like strategies. Thanks for watching. Until next time.